Just talk to us about how much the earth shook for VCs, tech. The overall counterparty risk was enormous, and no one seemed to realize.
Yeah, I think the sudden element of this is what hit everybody so hard. And I think, I don't know how many years of life were taken off everyone over the weekend, but there were people super stressed out, getting from not just big businesses, but SMBs and clients of the firm, not our firm, but SVB. But it really, I think, woke people up to the big problem out there. There's so much risk on a few big banks in Silicon Valley that it really just shook everybody up. And at the end of the day, I think you're seeing the ripple effects happen, and you're right in the middle of it. So I think the probably questions are going to be, how deep is this going to go? But we're still in the middle of it.
We're still in the middle of it, and the reality is you have spent so many years here helping firms become unicorns through raising money. You've worked with their venture capitalists. Is there a sense that the capital markets are now closing up for the people who had such easy access to money for the last 10 years?
Well, I wouldn't say they're closing up, but I would say this isn't helpful. And given that we're right in the middle of it, it's pretty painful for, I think, a lot of tech companies across the world. I think the fact the Fed came out and did what they did was incredibly helpful and expected to some extent over the weekend. But capital was pretty hard to find before this. And so right now, we're getting hundreds of calls from companies looking for, whether it's credit. I saw Bain on this morning talking about credit funds and structured securities and all that. But you see some of the big guys that wrote all the checks leading up to the big boom in tech and fintech, Tiger, D1, Code 2, really kind of pulling back on their private investments and looking at their portfolio companies or shifting to public markets.
Steve, you run an advisory that's at the heart of all these transactions, right? When the venture capitalists wrote their letter of support for SVB, they pointed out that it's not just a place that holds deposits for this sector. It offers a wide range of banking services where no one else would. So now where does this industry turn to? Where do the founders go when they need banking services and traditional banks don't offer them?
Yeah, you're right. It was not just a place where you stored your money. It was where all the money got transferred. They were doing payments. They were doing treasury management. They were doing wealth management, investment banking, you name it. And a lot of companies were essentially running their business off of SVB, not just essentially putting their deposits there. I think, it's interesting to hear SoFi and other fintechs who we know are have their hands out to essentially take deposits and help people out. But that's just one small sliver. The economy in the fintech universe is extremely strong. And I think there's going to be places for people to go. We were on the phone all weekend ourselves and with different clients, helping them get open up accounts at JP Morgan and other large banks and institutions. And that was happening all weekend. And I have to say, in talking to some of the bankers that were taking those funds in, that a lot of them were extremely gracious about the situation and not trying to sort of fearmonger on it. Yeah. So I think a lot of support around the banking system for each other.
From systemically important institutions such as JP Morgan, such as Bank of America. But what about Mercury, Brex, Capital? What about some of the neobanks? How much are we going to see these companies supported with influx of cash or more worries around them?
I think the good news is the bigger and better of those firms raised so much capital over the last couple of years. Companies like Revolut in Europe raised $1.25 billion from us, for example, and are growing like a weed and making lots of money. So some of these banks are very well heeled and don't actually have risky assets on their balance sheet like some of the larger banks. So in a weird way, some of the largest banks in the country are more risky than some of the neobanks. So we're very bullish on all things, or most things fintech, I would say. But and I think this is a great opportunity for fintech to shine. I'm
so interested, though. You mentioned kind of helping your clients move money into places like JP Morgan. There was a lot of chatter online, especially with the VC community, about this idea that you're systemically important and then you're everybody else. And I'm wondering, has the psychology changed now that the Fed has stepped in, that the FDIC has stepped in the way they did and said, you're safe no matter what? Does that mean that there will still be an embracing of these regional banking partners, or is there still that fear, given what we've seen at Silicon Valley Bank?
I mean, there's been a 20-year trend towards bank mergers and lesser banks in the country, and that's how I sort of built my career up at Goldman Sachs, doing a lot of bank mergers. But I would say I don't think we're going to move to a system like Canada where there's like 6 major banks and then nothing else. I think it could be a slow movement towards that because I don't think you really necessarily need as many banks as we have. But I also think there's a huge place for the fintech institutions that are coming onto the scene and solving some of these problems and using some of the very largest banks. So they got a layer on top of the largest banks, so you can have the best of both worlds.
Steve, I want to bring some breaking news just crossing the Bloomberg terminal. Bloomberg is reporting, citing officials familiar with the matter, that the European Central Bank's plans for big interest rate hikes in the weeks to come are going to meet more opposition now, right? Dovish policymakers are likely to make the point that because of what's happened with Silicon Valley Bank, the economic picture has shifted, not just here in North America, but in Europe as well. Similar to what we're seeing in the market and reflecting in terms of their bets on the Fed. How much has the economic picture shifted, to your mind, as a result of what's happened in the past 5 days?
I think the biggest thing is people are realizing that the blunt instrument of just increasing interest rates isn't always good for the overall macro economy, right? So it's great for certain elements of the world, and it's helpful for inflation, but it also has its ripple effect. So and it's hitting Europe just as much as it is here. You know, at least they got sold for $1. We can't even get SVB sold in the U.S. for anything. So which is a shame. So I think the ripple effects are happening, and I think, like I said, we're right in the middle of it. There could be more, issues.
I want to switch gears a little bit, because to folks that are trading every day in the market, maybe they're not always focused on crypto, but for the crypto community, they had 3 banks that were friendly to them just evaporate within 5 days, essentially. So I'm wondering what that means. There's this concern that the access to the financial system has been cut off for the crypto community, yet you're seeing Bitcoin up quite meaningfully. What's going on?
Yeah, I find it, quite interesting to see that, most of the tech IPOs are down 50, 60%, and Bitcoin was down way less than that. Now it's back up, whereas these stocks continue to fall. Crypto and Bitcoin are going up. So, long live crypto. And at the end of the day, blockchain's here to stay. I do think that the SEC and the government does appear to be having a very, very negative crackdown on crypto in the U.S. and globally. And so, the knockdown of some of these institutions certainly is not helpful, and so they're really forcing a lot of this activity to go offshore. We have a lot of clients in blockchain and crypto, and a lot of them are offshore from day one.
And they're seeking banking partners offshore. We're looking at interest in Swiss banks, in Middle Eastern banks at the moment, because there aren't the Silvergates, the Signatures,
exactly.
the SVBs anymore in the US. Ultimately, was there a question really about stablecoins here too? We saw the tumult surrounding USDC, a DeFi that had to rely on TradFi ultimately, because that's where Circle had parked a load of its money, its collateral.
Yeah, I think there's tremendous value in Circle and USDC and in some of the stablecoin, operations, which is why we're such a big fan of it. But I think at the end of the day, these institutions should be diversifying that risk dramatically, right? To put so much of it in one place, may or may not be the best idea. I think, thank God, it got rescued by the government, but it definitely put a scare into people and broke the USDC buck, if you will.